Well, hello everyone, it's Shooter. At the end of the presentation, please review our disclosures. We're going to go over our weekend box scores today for swing trade notes. Let's jump right into it. Now, let's start by talking the thesis here. Okay, we're still directional until we close below the primary wave 2 on both the NASDAQ and the SPY. The first trend support line is there. On the S&P, we have two additional trend support lines before the trend is actually broken. However, the NASDAQ has much more room to go to the downside, like in the 350 range, if this current trend support doesn't hold. Now, we'll go into that in a minute. Now, what we saw was a dark pull print around noon that had come in a little bit earlier in the day. So it was reported late, and I believe it triggered the continue sell to the downside. In other words, a call buyer bought a very large position multiple times, multiple billion-dollar trades, and I believe that the dealers had to cover the other side. So they were selling share, and that's where I believe we had our sustained sell from Friday. So going into Monday, we really have two outcomes the way that I look at it. So the opening range is the first 30 minutes. So you're looking at a 30-minute candle. We break above the 30-minute candle, I would think that we would continue to the upside. We break below that 30-minute candle, I would think that we continue to the downside. That's sort of what my whole thesis this week is based on. So let's look at the dollar. Now, the dollar is a headwind for indices, as long as it's really above 105. Now, our high here was a 105.03, and we had a higher high at 105.05. So, we do have some divergence here, so this could be a top. Currencies tend to be quicker than indices on topping patterns and tighter. 1-2 flush, 1-2 flush. So they're very consistent. They like the twos more so than the threes. So we want to keep that in mind. First target would be around 103. Now that would be bullish. And this is where I'm directional, because we currently have a headwind from the dollar, and that may change with a decline in the dollar. All right, looking at TLT, we did not get a lower low yet. However, we are pushing below the support line. We now have a new primary wave set up at 92.55, which is right there. It's a few bucks before where we were. Or we should get, a new primary wave setup versus where we were at our 8 days. Basically the same spot, just a little bit higher. But I wanted to note it that way so you could see it. Our target one is still up around 135, and we got a gap around 99.62 to the upside. So I think we are going to bottom here, whether it's down here below the 91.86 or right about in this range. It's probably going to be one of the two. We have a little more room in RSI, so we could actually print a little bit lower, maybe at 87, 88 range as well. However, once we get below this support, 91.86, that does open up the June 2003 resistance band down at 82. So we could flush all the way down there. So any positions you have long, make sure you give yourself some time. And definitely scale in on this one, because I think maybe we have 1 or 2 rate hikes and then the end will be. So I would say within 6 months, I would think, unless inflation gets some additional pumps to the upside, then obviously all bets are off to the long side. Now this week, we have a very light earnings. Stitch Fit always interests me because of their growth. I mean, they had significant annual growth year over year. So I would think that would continue. AutoZone is going to tell us a lot about what's going on the consumer side, and FedEx. Considering UPS is laying off with their $170,000 a year jobs in some of their slower cities, that might tell us something that's going on with FedEx as well. So, not that I'm going to chase it on the short side. There's a couple other shorts that I like better. As a matter of fact, in the primary waves, just make sure you take note of the bias to the bearish side, because a number of those are tradable to the downside if the market continues lower, just as a quick reference. Now, Vail, I still like this. I just like the consolidation and the squeeze look. A couple of weeks back, Kirk asked me to look for squeezes, and Vail was one of those. $15 November calls was my toe in the water. At this point, this thing could pump all the way up to $28. At least for our primary wave here. So depending on how good that squeeze is and how much of a demand there is for that product, could be a nice pop from here. But keep in mind, this is, sort of a distorted wedge. I say it's a wedge because low, higher low, et cetera. So I would think that we do break to the upside. However, we do close below that 8 day. That would invalidate anything to the upside. But we held up really well last week, considering our sell-off into Friday. Now, conviction position trades are still high, Bitfarms and GBTC. One thing that, actually, I'll go through that in a minute. Looking at Qualcomm, I think this is going to head to the downside. We got stopped last week. I think, now my question is, because we didn't have a continuation candle, do I want to wait to the 50-day and add, or do I want to wait for the breakdown? I'm undecided here, but I still have it as a target to the downside. Once that does break, depending, I'll let you know when I do enter. Now, the S&P right now, we're at the 8-day. Until we close below that intermediate wave 2, it's not invalidated. Now, I think our speed line is at 430 and 439, so it's about $4 lower than where we are now. I would suspect that holds. I really think it was Optex on Friday, and then a very large call buyer that simulated that selling. Now, whereas the SPY has this trend support and one other trend support here and another trend support here, the NASDAQ doesn't quite look as clean. This is our trend support. Then below that, we're down at 353.93. So if I was going to hedge, in other words, that 30-minute candle that I talked about on the S&P, we close below that, is when you want to do a hedge. And I'm really not a fan of hedging because it's been very expensive in this bear market because we've had no follow through. And right now, even with the way the chart looks and all the news that we have no real reason to think that we're going to continue lower than any of the other drawdowns that we've had, aka our cycle wave 2 low around 355 range or 356 range. We didn't have continuation there. I would have thought it would have continued lower there and got more of a flush. We didn't. So, but at the same time, if we close below R2, we probably are going to go back 50% at least, maybe down to about 360, and we would probably want to insulate. Now, you can do that by buying SQQ shares, right? Or buying $20 calls. Now, I would do no further out than the monthlies, the September monthlies, just because you want to stay shallow. If you're going to buy puts, buy at the money next week puts, because you're going to probably be in them for 15 or 20%. And then once we get a little, if anyone enters those, let me know. And I'll specifically try and track that to let you guys know, hey, this is when to get out, kind of thing. And make sure I let you know if I'm not going to be at the room. A little bit more downside on the NASDAQ from what I can see, because, right now trend support is held. I mean, we're right at, tagged it, bounced off a little bit, right at the 8-day. So it's a good spot for us to recover. Honestly, our FANGs are going to be a major issue on whether or not that holds or not. And as I go into primary waves, you may understand that because there's a few of them that I have covered call positions that we may want to take. And I'll go over that in just a few minutes. Looking at crypto, Bitcoin is now pushed a little bit. It's around 28,200. When I just looked, I have not thrown a new chart in here. I ran this on Friday. I think this holds, as long as that 2,000 or 24,800 holds, which, by the way, this has been indicative of bottoms, even numbers, 0, 0 in the sense. It's been indicative of tops. I think this is drive 1, drive 2, and we end up with a drive 3 out there. And then we basically do the same thing here, that stair step. However, we could end up with a step a little higher and back in this flat too. So we might be here quite a little bit of while. Now, looking at GBTC, now, relative strength compared to Bitcoin spot. I don't think anyone wants to sell this because I think a Bitcoin ETF is imminent. I think BlackRock gets approved before GBTC though, because they actually gave them instructions on how to get it done, and their attorney had to write up on that. But so, I'm thinking 2, 3, 6 months we should be done. And then, right now there's only about a 17% premium in that. So keep that in mind. There's no 50% spread here on this now. It's about 17%. So we're not going to see more than 23, 25 bucks to the upside once that gets approved, unless we get a run on Bitcoin. Okay. Now, Ethereum looks good here. New primary wave setup at 1517 with a 90-minute trigger at 1628. So if you don't have a position, you could start a quarter positioning here. Now, one thing before I forget on Ether is sometimes this is indicative of an ABC pattern that's become extended. Sometimes. Okay. So this could be A, this could B, and we could still get a C. So we closed below really our prior low, which I can't really see exactly what that is, 1470, whatever it is, 1460. This low, I would be covering if I was long. The reason is there's not enough room to say, hey, breaks below that 1517, I'd be covering. I'd give it a little more room in this scenario. But we get below that, then we're probably going to roll over and at least back test this 994.60 is what I would think. All right, looking at XRP, I like this thing. I don't know why, I just like this thing. All the news that's coming in on it, I'm still spending about 50, 60 minutes to 2 hours reading information on XRP. I guess FTX got court approval to sell XRP and the Solana holdings because they're not security. So now this is, there's a ruckus there that, hey, now another court has said, which is precedent, by the way, that they're not securities. So now everyone's going to start using that. So I don't know. I just like the saga here. Now, the only downside I see to XRP is I think there's a huge benefit if we stay lower in price for the purpose of money transmitting. So, to a certain extent, we get above, $2, $3, $4, $5. Obviously, there's going to be a higher cost for us to, of course, put on those transactions, and that could weigh on price. So, it's sort of a double-edged sword. But I still like the chatter on this. I just haven't decided to enter yet. We get above the 200-day. I get interested on a shot long again, which probably only takes us to about 64. And then we have to watch that count. But I would much rather get a back test of my speed line and then enter there, very much like I said last week. So, well, that's what we have for this week, folks. Great trading. Until next time.